sound of profitability. Now, if a business owner is a musician, that's the tune that they like to hear every day of the week. Now, here in BISNOMICS, our aim is to help you fine-tune your instruments, prepare your orchestra to perform to perfection so that you will hear that tune of profitability at every turn. I'm Wirasekara. Welcome to your weekend's most profitable 60 minutes. This is BISNOMICS. Capital markets. Well, no matter what kind of a business you may be into, or maybe if you are an individual, capital markets is a concept that you all need to be quite clearly aware of. Now, the Sri Lankan capital markets, in line with some of the policy decisions that were taken, have been showing some interesting signs. At one time, we were being lauded around the world as one of the best performing markets. At the next turn, well, there was a bit of concern. But let's demystify all these today and make sure that you are prepared to navigate your way through this maze of capital markets and make the right profitable investment decisions. And to help us do that, we have just the perfect candidate. He is someone with more than 2 decades of experience in the capital markets and investment sector. And I would now like to welcome Dilshan Wirasekara, the guest of today's episode. Dilshan, welcome to BISNOMICS. Thank you for joining us today.
Thank you, Tharindu, and pleasure being here. Thank you for having me.
Dilshan, I want to start talking about something that everyone has been quite concerned about, and everyone kind of wants to know what's going on. The CSE, extreme high performances, at one time even being considered a darling of a stock market, and then drastic drops. What's exactly going on at the Colombo Stock Exchange?
Yeah, so Tharindu, I mean, we've seen, I think, excessive volatility in the market. There is a desirable amount of volatility that's good for capital markets.
That's good.
But I do concede, exactly, that's good. But I do concede that the first 2 months for the year, that is January and February, have been a roller coaster, to say the least. I think if you look at why that has been such, I think you have to really analyze and see how the trends of the exchange and essentially new account openings that have sort of resulted in this initial euphoria boom, and then some concerns and maybe some measures taken by the regulator that have sort of maybe been misinterpreted by market and resulted in a crash. So I think if you look at it over the last probably 6 months, we've seen a big increase in the number of accounts being opened. So there is a lot of awareness being given by the CSE, by the regulator. For the first time, we have a state minister appointed on the subject of capital markets. So there's a good sign. So there's a big push, I think, even from the administration, from the government, to make capital markets accessible to the general public. And that's a good thing. And that's something that we've been...
If I may interrupt now. When more people participate, that's actually a good sign, because it shows the capital markets are being adopted. And a market with more participants is always desirable. And at the same time, we saw low interest rates also driving more people towards the capital market. So the forces have been quite positive in that way.
For sure.
But these drastic drops that have been having, we have seen, that's a bit of a concern for a lot of people.
Yeah, so I think the answer to that, Tharindu, is that probably it overshot fair value. So you did have the market overheating at a certain point, and thereafter that correction came in. So I would really not blame anyone per se for that, but I think it's maybe new investors not really understanding the fundamentals behind markets.
The risk fundamentals.
The risk. So I think a lot of people probably in Sri Lanka follow a very herd mentality when they come into the market. We've seen something like maybe about 50,000 new accounts being opened over the last 6 to 7 months. Just to give you some context to that, for the last probably 10 years, we had maybe about 70,000 active CDS accounts in our entire market. So when you convert that with a new 50,000, that's a lot of volume.
It goes to like 100% increase over a very short time.
Exactly. So that essentially drove everyone into the market. The market was undervalued. I believe it still is undervalued.
Undervalued.
Yes, I do believe after the correction. And there's a lot of value in there, but you have to pick your stocks. Unfortunately, some of the new investors who came in maybe didn't really analyze fundamentals and sort of followed that herd mentality that resulted in the market overheating.
My friend got a profit of 100% increase, his investment went up by 100%, so I am putting this much, I should get the same. This is not a fixed deposit where you can put money and expect a fixed return, isn't it? And that's the very fundamentals of risk.
Exactly. So I think what it takes is, I think investors need to really understand how markets operate. And if you don't understand, I think you need to seek counsel in a registered stockbroker, or if not, come to the equity markets through maybe unit trusts, where there are professional fund managers managing that, which may be a better approach than just investing in hearsay or what someone says without really analyzing the fundamentals of that particular stock.
And the investors themselves, they need to do their research as well, isn't it? I mean, rather than just depending on an external word, if they also study the market and come, I think some of these heartaches can be avoided.
Of course. And if you can't do that, Tarindu, and maybe I think we have issues with financial literacy in this country. So therefore, I don't expect every Sri Lankan to really have that knowledge. If you don't have that, why not come through a unit trust? Why not talk to a stockbroker, seek counsel, look at research and make those investments rather than just hearsay? So I think that's what we need to do.
Talking about advice for the market, this is a little bit off the topic, but then again, we have seen a plethora of YouTube advisors and social media advisors who are trying to advise people on buy this stock, buy that stock, etc. And sometimes people actually try to follow that and they fall into big trouble. So I think the market also at this point needs to realize and understand that not everyone who comes in front of a camera, or rather not everyone who will make a video and upload about capital markets is not someone who is really qualified to advise you on that, isn't it?
Sure, and I don't think that is permitted regulatory wise also.
Correct, and we saw so many advisories being issued as well.
Exactly, so you need to be a registered investment advisor to really advise people. So I would again advise anyone coming into capital markets, anyone looking at investing at equity, to really talk to a registered stockbroker before you really make that call, and not really rely on YouTube advisors that you see.
Understood. Dilshan, let's talk about the capital market fundamentals of Sri Lanka.
Sure.
Because there's been this rallying cry that, look, our fundamentals of some of our economics itself is not really strong. We've been in a deficit for ages, and there seems to be no way out, unfortunately. But in terms of the capital market fundamentals of Sri Lanka, how strong are we? Or are we not strong?
So let's talk about it. I think you need to look at it in two aspects, Tarindu. First is the macroeconomic aspect of the country that has a bearing on the capital market, and then maybe valuation and earnings in relation to the stock market. Now, if you look at the macroeconomic point of view, yes, we do have some concerns. We are obviously running a budget deficit. We're probably gone to over 100% this year because of COVID. Our reserves are down to 4.5 billion. We have a lot of foreign debt maturing over the next couple of years. GDP growth obviously has been muted because of the pandemic. Hopefully we'll recover this year. So we have a few macroeconomic concerns that maybe overshadow the market. But however, if you look at the capital market specifically, I think the fundamentals are quite strong. And that's purely driven by valuations and earnings. Tarindu, the earnings of listed companies in the last quarter of 2020, September to December, is an all-time high that we've seen.
All-time high?
All-time high.
Despite a pandemic?
Despite a pandemic. So we've had the last quarter, public quoted companies reporting 85 billion of profits for that quarter, right? And if you look at 2020 as a whole, still there's a 5% growth over 2019 in terms of earnings.
Yes.
Right? So these are reported earnings of companies. Obviously, with earnings increasing, that makes the market cheaper, more attractive. The current market PE ratio of the Colombo Stock Exchange is around 12.5 times. If you take regionally, that's about 17, 18. So we are quite undervalued in that sense. Price to book value multiples is about 1 time in our market. Other markets are probably 1.7 to 1.8 times.
Where it's valued more than actually the price.
Exactly. So our valuations are fairly, that's why I said I think our market is undervalued. There is good value there, but of course there are macroeconomic concerns. A couple of other things that maybe we need to address is liquidity. We don't have enough liquidity. The public float of some of these companies aren't great. Again, we've seen Some companies address that through share splits
Yes.
and increase liquidity. So there are things that we need to do, and I can see those things happening now that will actually improve and strengthen the fundamentals that you were speaking of.
Dilshan, the seat you're in has been quite comfortable all this while, because I've been asking questions, I believe, which you're also quite comfortable with, and you've been answering them very well. I'm about to heat that up a little bit.
Sure.
Pumping and dumping, these are rallying cry which we hear. People say that we are a small stock market, so as a result, the stock market is being manipulated by a few individuals. Is it true, or is it just a few investors crying wolf? I want an honest answer. The country wants an honest answer.
Sure. This time around, Tharindu, I can responsibly say there has not been any pump and dump. I think the volatility that you're seeing is a result of inexperienced investors coming in and going out, and not a result of any one or a group of people manipulating the market. The Colombo Stock Exchange, as well as the SEC as a regulator, has fairly advanced surveillance systems that could pick up any pump and dump or manipulation that takes place.
Dilshan, just to clarify, this is not a system where two people can talk with each other and say, look, I'm going to demand, then you will sell at this price, and etc.
No.
And I mean, there are mechanisms to check and put those into like a stop.
Exactly, and it's an automated trading system, Tharindu, that you have to essentially queue your orders to, and you can't, other than changing price, there's no way that you can get preference in that queue. I think there's been a lot of allegation of this because we've maybe experienced some of that in the past. I think the 2009-10 era, there was a lot of talk of pump and dump. There were a lot of cases brought forward, action taken by the regulator also for some of those cases. And I think that era is done and over with. The volatility we've seen in 2021, in January and February, is purely a result of retail play. And maybe inexperience of certain traders in how they enter and exit markets. And I can very responsibly say that there has not been any pump and dump.
Dilshan, a quick note on another matter that a lot of people are concerned with. We see that so many times when, let's say, for example, the S&P, the top 20 companies listed, when we see the prices of those falling, the stock exchange might, bring it to a stop. They might halt trading for a while. What's the logic behind that? What's the expectation? Is it like giving a chance to the market to rethink? Because every time when you get a message or alert saying that, look, this has halted trading until this time, it kind of dents the investor confidence to a certain extent, especially if you're not experienced. Sure. What's the whole logic behind that?
So it's essentially to curb excess volatility and to protect investors. You have the circuit breakers where on the S&P, if the market drops 5%, there is then a cooling off period of about a half an hour that the market is stopped for people to essentially gather their thoughts, make sure that information has been disseminated to all investors, and then the market would restart. A further 2.5% drop, again the market would halt, again for a half an hour and restart. Thereafter, if it drops another 2.5%, which is then 10% for the day, the market would essentially close. So it's those circuit breakers are there mostly to protect investors, Tharindu, and to sort of make sure that there is no excessive volatility as a result of any external incident that may occur.
Which segments of the capital markets are poised for growth in the upcoming time period in Sri Lanka? Let's talk about that after this short break. This is BISNOMICS. Welcome back to BISNOMICS. We are in conversation with Dilshan Wirasekara regarding the capital markets of Sri Lanka. Dilshan, let's talk about a very essential part of any capital market from a government side, which is the Sri Lankan government bonds, the bond market. Now, of course, this has been a controversial market with regard to different successive governments. This is not a matter of blaming one government or so, but Sri Lankan government issued bonds have been rated quite low, and rating agencies are downgrading us. Surely this cannot be good for the government fiscal plans. What are your thoughts?
Definitely. It has not been easy a couple of months for Sri Lanka. Obviously, 2 downgrades last year in the midst of the pandemic and even before. And obviously, we've seen international sovereign bonds that the government has issued trading at significantly high yields. They're trading between 16 to 25%.
What's the usual average in the
So
region?
these were issued at maybe 7-8% coupons. So they've maybe tripled in terms of yield or declined in price.
And Dilshan, let's not beat about the bush here. I mean, we've heard some media reports from foreign media where they even refer to us as junk bonds.
So we are in junk territory. We are definitely, because it's below investment grade rated bond. When you're in the C category of ratings, it is classified as a junk bond. That's just a term that's used in international markets. But there are many other countries who issue junk bonds. And there are many investors who invest in junk bonds. I think the issue at hand that we currently have is, are we going to default has been really the concern, because our reserves have dropped down to now 4.5 billion or thereabouts currently, and we have a maturing ISB just around the corner in June for $1 billion. $1 billion. And then thereafter we have even next year about 1.5 billion of ISBs maturing. So that's been the concern.
ISBs in the sense of
international sovereign bonds. So that's really been the concern of whether the government will really have the capacity to repay.
Especially with being struck by the pandemic as well.
Sure. So all your foreign exchange, obviously, in terms of tourism earnings, have been curtailed, and hopefully some of those will recover this year. However, I believe that the government has sort of looked at maybe temporary short-term fixers. We've just heard the government announced that they finalized a 1.5 billion swap from China. Now this is going to buy us more time. So that means I don't think we are going to see Sri Lanka default in 2021. We bought enough time to kick the can down the road.
Understood. And Dilshan, just to clarify now, this defaulting, we've seen sometimes very oil-rich Middle Eastern countries as well defaulting on some of their loans. It's not a deal breaker, but then again, for a smaller country like Sri Lanka, which has a record of not defaulting, that's the last thing you want in
exactly. And you can't access capital markets, international markets thereafter if you default. So we've had 100% track record, a clean track record of repayment. I don't think any government would want to spoil that, Tanidu. But the interesting thing is, I think we've already repaid about 2.5 billion of borrowings that we had through 2020. And interestingly enough, when we started 2020, the debt dynamics of the country were 50-50. So we had 50% of government debt issued in rupees domestically, 50% of that in foreign loans. Now we've actually, through the pandemic, changed this to now 60-40. So we have now more local debt, more domestic debt at 60%.
Encouraging.
And only, very good, very good. And I think this government is actually making that conscious effort to change that mix. So what you will see is probably us repaying some of that international dollar borrowings and replace that with domestic debt, which is a healthier place to be.
So Dilshan, the rallying cry or the echoing cry that most of our debt is in dollars is actually not true.
Not anymore. Not anymore. Okay. It is not. So it's now, currently it's a 60-40. And again, I think one thing that you need to look at it is, if you take the total quantum of foreign currency debt that we have, I believe it's something ballparkish around $35 billion of debt. The weighted average yield of that borrowing is actually only 3.8%. So it's not way off the charts in terms of, some people projecting or saying, because there's a lot of legacy debt that was borrowed or concessionary debt that was borrowed.
Correct.
And as long as I think we can replace the maturing debt at more or less ballpark those sort of rates, we'll say at a maximum of 5%, I believe this is sustainable. The debt dynamic is sustainable and we won't really go into default.
Yes, because we see some of the very developed countries in the world. For example, take US, they have extreme high levels of debt to GDP ratios. And exactly. But the important thing is, when they borrow, there is a plan on where to invest and how to keep it going. As you said very correctly, even from a macroeconomic viewpoint, I think we need to have a plan, not just to borrow and settle off previous loans, but borrow and invest in the right sectors. In fact, recently the Chinese government, when they had one of their main political meetings where they also share their economic policies, they've brought about artificial intelligence as one of the new directions for their economy. And so you can clearly see how they are aligning their future economic direction in line with the world. And as you very correctly said, we also need to get some of those macroeconomics right. Let's talk about these low interest rates, because Dilshan, you and I, we can talk about capital markets, investing in the stock markets and all that. But let's think about some of those pensioners. Some people who are, of course, there are some pensioners who are, let's say, above 65 or 70 who have also got into the capital markets and they are learning things. But then again, there is also a vast majority of people, especially those with those who may be out of Colombo, the ones who don't have much of a financial literacy, they are not getting into the stock market, and they keep on complaining about how the amount of interest they get is now less, and etc. You know, the problems they are facing. Now, these risk averse investors, I would say more like the deposit holders, and mind you, we also have quite a big aging population.
Sure.
Is this not going to have a long-term negative impact on our economy?
No, Taridu. I think it's going to have a positive impact.
Positive impact.
Yes. So low interest rates will be pro-growth, and that's something for a long time Sri Lanka has not had. Now, historically, we are used to having high interest rates because we had high inflation. So country ran inflation even just when the war ended at 20%, so our interest rates were 22%. We've also been a country that has had real interest rates, positive interest rates for a long period of time. You don't see this in the developed world. So for example, if you take the US or take Japan, rates may be negative in relation to inflation, right? But in Sri Lanka, even to date, even now, though a lot of people complain, we have positive interest rates. So if you take bank deposits at maybe 6%, inflation is currently at 4%. So you're still making a 2% positive. I think we need to, as a nation, probably now get used to this new norm. I can't see interest rates going back to that double-digit territory, to the 15% we've seen in the past. Again in the future, and I think it's detrimental.
Bad news for the risk-averse pension holders and all
yeah,
that.
I mean bad news for anyone who was sitting on their cash and thinking that that's going to make a living for me. So yeah, bad news for that people. But I think what it will also do is it will channel that money to a more effective area in the economy.
And more economic activities.
Exactly, and stimulate growth. So fixed income is not the only instrument you can live, and equity investments are another alternative asset class that I think people should consider. So in Sri Lanka, we are a nation of savers, but we are very conventional in our thought process, and we stick to bank deposits and minimum risk sort of investments and expect to get 5-6% positive interest rates. So that is not going to happen anymore, and I think even the pensioners, the aging population need to look at alternative asset classes to invest, and equity is one of them. Real estate could be another. You're having new products like REITs and maybe precious metal based trading instruments that will come to the exchange also fairly soon.
To the Sri Lankan market as well. Okay.
So you would essentially then have a gamut of investment products apart from fixed income. Correct. That you can choose to build your portfolio and still secure, I think, a decent return to live off from a maybe a retiree's perspective.
Dilshan, the pertinent question, anyone who watched this show at the start when we said capital markets, there is one question that's ringing in their head. That would be, which sector should I buy? Now, no one is holding you, accountable or responsible for what you say here. But from your experience, obviously you've observed and monitored the market for a very long time. You would have some experience. And of course, yes, markets are subjected to risk and change. That disclaimer that is given and the warning that is given is quite valid even for a show like this. But from your experience, what sectors or rather what areas of industries are we expecting growth into the future of this year?
Yeah, so I think if you take it from an economic point of view, the government is very much focused in terms of export, because that's one sector we need in terms of earnings, dollar earnings. Manufacturing is another, because there is now a big shift in terms of import substitution. So can we really manufacture what we've been importing? So again, the manufacturing sector is going to probably do well. We are quite bullish on the FNB sector, because I think Sri Lanka coming into middle income level, people's wealth growing, disposable income growing is also going to... Despite a pandemic. And I think we've done pretty well through the pandemic, Taridu. I think we all need to acknowledge that. That you will see even people demanding for maybe a little bit more luxurious style of living. So the FNB sector...
I mean, Dilshan, the best indicator is amidst all these talk about economic downturn, recession, difficult times, etc., people are still screaming and wanting vehicles.
You're right, and I mean I'm fully supportive of the import ban because I think we have way too many vehicles on our road anyway, and there is no shortage of luxurious vehicles if you just go on the roads of Colombo, Tarindu. But I think, I mean, imports will need to come in at some point in time, but we should look at what we can manufacture here. So we are bullish on manufacturing, we are bullish on export, we are bullish on the FNB, we are also quite bullish on the banking sector, where not too many are. And one reason for being bullish is that obviously the banking sector will do well with the economy and with the growth we envisage that we will see in 2021. Plus, we believe there is a lot of those stocks are undervalued. So I just told you in terms of a market PE of 12 and a price to book of 1. If you take some of the big banks, if you take the banks are trading half its book value and maybe 5 times their earnings, which is phenomenally low. And at some point in time, you will see that correct. We've seen the past sort of happening, so it should happen in the future as well.
Because especially with a lot of these moratoriums and lower interest rates and all being brought in, there was a lot of skepticism about the performance of banks, but then again banks have done quite well despite the pandemic and the results are quite strong.
Yes, you're right. And I think maybe the full effect of the moratoriums are not yet seen on the banks because, I mean, you've not recognized a potential defaulter yet because you're giving him time to pay you interest and capital and deferring, so that's probably still down the road. Nevertheless, I think with the pickup in economic activity, the NPL position wouldn't be as bad as some envisage. And we are quite bullish on the banking sector as well, Tarindu.
Beyond the traditional deposits, what other investment options are available for the Sri Lankans? And we talk about digital economy, we talk about digital capital markets, but what are the dangers that are lurking that you should know about? Let's find out about that and more on the other side of this break. This is BISNOMICS. Welcome back to BISNOMICS, your weekend's most profitable 60 minutes. Our focus today is on the capital markets of Sri Lanka, and joining us for this discussion is a veteran in the field with over 2.5 decades of experience, Dilshan Wirasekara. Dilshan, now if you look at the common deposit holders, the ones who are happy to put the money to FD, as you very correctly said, that's no longer going to be the option for them, especially if you are looking at getting a better return. Now, you did mention a few of the other different options that are there. Now, apart from the share investments, because some of them will be like, no matter what, I don't want to put my money in the stock market. But you don't have to put money in the stock market. There are the options even in terms of a debt market where you can lend it out to the debt market. There are options where you can get better returns. Enlighten us on a few of these instruments.
Sure. So I think one is unit trusts, and we've seen the popularity of unit trusts grow, and these are fixed income unit trusts. So these are not unit trusts that are investing in stocks. These are unit trusts investing in fixed income instruments like commercial papers, debentures. So essentially, you'll get your money back at a particular sort of a rate. There are many money market funds out there that have grown in popularity. And
we
currently,
see that some of these unit trusts, for example, or the money market funds, while the market rates might be at about 6% or so, they've been giving at what, 10%, 11% even.
Exactly. Even currently, I believe maybe 7.5% to 8% yields currently through unit trusts, as opposed to maybe 5% that you'll get in a bank FD, and maybe 6%, 7% in a NBFI FD. So they are still better.
Non-banking finance, NBFI.
NBFI is being non-banking financial
so all these,
institutions.
maybe
the finance companies.
Finance companies, but they come with a little bit of even a further added risk, isn't it?
So again, you can pick the the bigger of the finance companies that are relatively safe,
that has a good track record.
Exactly, that have been around for 20, 25 years plus. So maybe the top 20 of that 40 odd LFCs are the ones you should.
And do you see regulation coming in more strongly at them now? Because let's face it, we've heard of cases where some people even get murdered when trying to deal with some of these issues. No, let's talk the reality here, Dilshan. But do you see that the government authorities are now trying to put more regulation towards some of these NBFIs?
Very much. And I think increased capital adequacy, increased minimum capital levels, increased monitoring happening. So the central bank itself has a supervision department that monitors the NBFIs just like they monitor the banks. So I believe that that is happening. There is also a push for consolidation, that we will be left with maybe a few bigger finance companies as opposed to having 40, which is I think way too many for our economy. But apart from that, going back to the question of investments, so I think there are also other debt instruments that our public are not aware of. So you can invest in debentures. There are debentures, fixed income instruments, banks issue them, listed companies issue them.
And this is through the stock exchange.
So there are listed debentures through the stock exchange. There are also unlisted debentures. So the listed debenture, the advantage is you get a regular coupon of interest, but you also have an exit, because they might be typically a 5-year sort of a tenor.
You can say it at the end of 3 years.
You can, or even end of 6 months or 1 year. There's nothing prohibiting you. There will be a price you can exit at. There are also structured debt instruments that a lot of people in this country are not aware of, that you can essentially, if you talk to any investment bank, they can sort of help you with that. So securitized papers is one, where you essentially securitize a receivable, maybe a lease receivable, a housing loan receivable. So there is an asset backing that paper as well. I did mention debentures. There are short-term commercial papers that good corporates issue. So you can be selective and choose the corporate. And there are corporates that
and you get your money back within like 270 days or so.
So generally commercial paper is less than 1 year, less than 365 days. But so 3, 6 months, 9 months, 12 months papers are out there. These are some of the other instruments that are sort of freely available that the public probably need to be a bit more aware of and search for. I did mention REITs. So REITs have been introduced, real estate investment trusts.
And that's technically where you can sort of buy a part of a building, in other words.
Exactly. So if you can't really afford to buy an apartment as a whole, you can invest a small amount of money in a REIT.
How do I get the return from that then?
It's paid back in dividends.
And so these REITs which are issued now, is it available for the Lanka?
Not yet. So it's the legislation has just been changed to allow REITs, and I believe there are 2 or 3 companies in the process of trying to set up the first REIT.
So, for example, if I am someone who is building an apartment, I can actually open it up for investments to outsiders then.
So you can actually maybe put it to the REIT. The REIT can own it, but it has to be an income-generating property, Tarid.
That which is already built.
Which is already built and is getting rent income. It can't be just a dud property that doesn't have a cash flow behind it.
Understood.
So REITs are there. Like I said, we are looking at precious metals sort of being introduced. So I think little by little, you're going to find more products available for the Sri Lankan investor to choose from.
Because if you look at our grandparents or sometimes even our parents, they've had their alternative finance mechanisms as well. For example, sometimes they have bought gold and they have kept it saying, later one day when you grow up, I'll sell this, I'll do your education with this, etc. So this alternative finance is not something that is totally new. But I think we have to get accustomed to the modern capital markets and the options which are available.
Definitely, definitely. And also real estate is another asset class I think that most Sri Lankans love to hold. Obviously, there's only so much of land out there.
Correct.
And that
we are a tiny island.
Exactly, and that price has ever been appreciating. So it's a good investment that holds value. You'll probably never lose money on real estate in Sri Lanka. That's another alternative that I think. So I think the Sri Lankan investor needs to come out of this sort of fixed concept of, I put money for a year, I get 10% and I live off that, and maybe look at the alternative asset classes.
Maybe now you can actually earn that amount of money maybe in a month if you invest in the right place.
Sure.
Dilshan, let's talk digital.
Right.
Now, we've seen so many frenzies happening in the global markets as well. For example, GameStop, perfect example. Of some blog people read about it and then they went and bought stocks and the stocks were just through the roof. But let's talk about in Sri Lanka. Now, we were quite happy to see how the CSC was brought on digital and we were operating in a 100% digital approach for a long time, and now that's becoming more like a standard way of operating as well, which is great. But having said that, despite all this great enthusiasm we have, what about a potential great fall? Because end of the day, all it takes is one good hack.
Sure.
Your thoughts?
So I think, again, hackers attack markets that obviously are quite big.
You don't have to mention any examples or anything, but from your experience and from what you've seen in this market, does the Sri Lankan capital market also get attacked by hackers?
Not to my knowledge. Not to my knowledge. I don't think we've been, because we, I believe, have a fairly good firewall security systems in place that can sort of avoid that. Having said that, that's ever evolving, because I think in the digital space, hackers find ways and means of doing stuff that is ever changing. So we also need to be dynamic and evolve with that.
And more often than not, rather than through technical methods, it's through what we call social engineering. They find out some information about you from Facebook or etc. And they just enter that to a banking system and your money is gone.
Sure, yeah. So we've been lucky, and I think we probably have the systems and the processes that can sort of avoid it. I know the Colombo Stock Exchange is upgrading its systems now to cater to a DVP, RVP and a central counterparty settlement system that will further strengthen the IT infrastructure that is there. Also, I think one key thing that we've seen happen is that we currently are onboarding most of our clients digitally. So there is an app that you can just download, and for the first time,
the digital KYCs are there.
Exactly, the KYC, all of that is e-KYC happening, which the government has sort of enabled through the Department of Registration of Persons being online on that portal. So the first time we have that for the exchange. Very soon the banks will be rolling it out, thereafter the finance companies. So I think you can't avoid this digital thing. And
it's here to stay.
It's here to stay, and I think all businesses are going to evolve into that digital space.
But the users need to practice common sense, isn't it? Like, have a strong password. Don't just put 1, 2, 3, 4, 5, 6.
Sure, sure, definitely. But again, I think you can avoid stuff like that, where even we'll say if there are trades done on your account, someone hacks or whatever, it's very difficult to take money out, Tarinder, because the payments are locked into your accounts.
Yes.
So the fund flows only from your account to the CDs back and forth. So there is no one can sort of take your money, sell your shares and run away with it. It's very unlikely to happen.
Understood. On a final note, and we need to elaborate on this, I'm sure, what strong economic policy actions are needed to attract foreign investments? Because let's be realistic, we have not been the darling of attracting foreign investments for some time, and sometimes the history, maybe the size of the market, there can be so many factors there. But in your perspective, to attract foreign investments to our capital markets, what kind of macroeconomic level policy, or maybe what kind of government policy decisions do we need?
So I think the main thing is a policy consistency. That is what we need. We've had too many changes in policy over the last 10 years. If you look at from every change in government, we sort of roll back the policy that the previous government had.
What you're saying is every 5 years we hit the reset button.
Exactly, exactly. I mean, every new government would appoint a new governor of the central bank, right? If you recall, I think some of the Fed Reserve chairmen have seen through 3 presidents of the United States, right? So there is policy consistency, and I think that is the single most important thing that we need to attract foreign investment coming in.
Are you also saying that we need to decouple some of the key financial and capital market institutions like a central bank from politics?
Yes, definitely. I think that is a need, and I think there is some movement towards that. I know there are discussions with the IMF to look at how that is sort of done, taking away the public debt office, which is currently how the government raises funds from within the central bank, which is also the custodian of the EPF. So you have a conflict of interest there. So there are moves to sort of decouple that and move the public debt office out of the central bank, maybe EPF to a professional fund management agency. And I know those things will sort of so slowly happen. But another big concern we've had is because of our dwindling reserves, foreign investors have sort of had a doubt on the rupee. And the direction of the rupee. We've seen the rupee sort of depreciate this year quite significantly. We know our reserves are down. So there is concern.
The whole world knows it.
Exactly. So even the foreign investor is looking at, should I come now when the rupee is 195 if I think it's going to go to 220? And that has been a sort of concern that has been there for a long time. So I think with maybe...
Are you envisaging a future in this year where it will go past 200?
I think so. I think so, and I think our call is probably towards the end of the year, something between 210 to 215 on the exchange is our call.
So hold on to the dollars.
Well, I mean, if you can, because I think there is new regulation that now doesn't allow you to hold on.
Some of it
yeah,
to
you have to
rupees.
convert, so even the exporters have to convert 25%. And those are measures that need to be taken. You can't address, we are in a pandemic, we don't have our foreign currency inflows that came from tourism. The remittances have been strong. However, I think that's a one-off. Because a lot of people have lost their jobs overseas, and you may not see remittances keep pace. So these are measures that were needed.
Tourism also will take some time to pick up.
Definitely, and I think probably towards the latter part of this year or 2022 is
that's
when
what
we'll
the
really,
industry observers are saying as well. Yes.
that's when we'll see people, starting to travel. So that's another thing. So we need to find a way to stabilize our exchange rate to then make it attractive for foreign investors to come in. But like I said earlier, I'll say it again, the single most important thing, Tarindu, is to have a consistent policy and not keep changing that.
There was a very interesting article recently on some foreign media where they identified and said that Sri Lanka is trying to take a leaf out of the playbook of Malaysia and not going with IMF, trying to go with loans from other countries like, for example, China. And that way trying to reduce the influence that IMF, because IMF loans come with a lot of restrictions.
With a lot of conditions.
Are we seeing that kind of a trend?
Yeah, and I think our approach has been to go more into a bilateral arrangement rather than have multilateral arrangements with these donors. Definitely the IMF comes with a lot of conditions. Now sometimes those conditions may be good to instill discipline in government spending and bringing down certain ratios, but I think the approach of this government has been to attack it from a bilateral perspective, look at friendly countries, China, India. I mean, that's where all the action is. Those are the two markets that are the future for the world. 1/3 of world population is in China and India, and we are quite
China
close
has
to that.
been faster to come out of the pandemic as well, even I think better than
Definitely,
India.
definitely.
Because we've seen the amount of investments going from India to the rest of the world has gone down by more than 30%.
Sure.
But China, on the other hand, is emerging from the pandemic much stronger. So as you very correctly said, that having that right bilateral...
And one of the few countries who have had positive growth in 2020
Correct.
despite the pandemic. So I think, so I don't fault the government's approach in terms of going for bilateral as opposed to multilateral. And I think that's what we've decided to do.
Dilshan, Wirasekara, thank you so much for joining us today. I think we discussed a plethora of topics and you laid it out all there, and I really appreciate how you answered all the questions honestly and with your market viewpoint. Wish you good luck for all the future endeavors, and do continue to do your part to keep our capital market strong.
Thank you, Tarindu. Pleasure being here. Thank you very much.
Our focus today was on the capital markets of Sri Lanka. What we need to do to make it stronger, and what are the future investment options and opportunities that you need to be aware of. And with that, we wrap up today's episode of BISNOMICS. This is your weekend's most profitable 60 minutes. I'll see you with the next episode.